Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa. It's your market update for the week ending August 19, 2016. Hard to believe August is almost behind us. Quick breakdown on the week. Corn, actually December corn for the week up at 11 cents. So far for the month of August up 2. Today actually is the highest close since July. November beans are up 21 cents on the week, up 3 cents so far for the month of August. December wheat up a nickel for the week and 8 cents for the month of August. Commitment to traders came out this afternoon. Funds actually, as of this past Tuesday, had added 24,000 new shorts to corn, which puts the total corn position at short 161,000 contracts. That may be deemed a little supportive come Monday, but with the recent uptick the last 2 or 3 days, that short probably has probably been lightened. Soybeans long 101,000 contracts yet, and wheat funds are short 105,000. So again, keep in mind similar pattern. Funds are short corn, funds are short wheat, short the feed grains if you will, and long the soy complex. The soybeans was led this week mainly by strength in soybean oil due to some tightness in palm oil supplies and some concerns of soybean oil going forward. We'll see if that continues to play out. Keep in mind it's late August. Some seasonalities come into play rather aggressively depending on the year soon as you get into late August and into September. So that deems watching, and we'll visit on that in a second. Still the great debate on yield, which is typical for this time of year. The USDA projections on yield at 175 on corn and 49 beans. Much conversation in the marketplace about that. We'll see some more debate next week with some crop tours. So there's a lot of noise in that regard, but keep in mind it's a very good crop. To what degree, only time will tell. But that's going to be key going forward. So producers, farmers may want to look at their extra bushels that they may have difficulty putting away, and look at short-term selling opportunities because of the seasonality. It's not uncommon for the market to have a little bit of an uptick or some strength in the month of August off of your late July lows before in late August, early September, then especially in years with big crops, to see another seasonal break into the early and middle part of harvest. So keep that in mind. CRB index, commodity index, still, for the first half of 2016, one of the actually the best performing asset class for the first half of the year. Now keep in mind the dollar, lowest level since the BRIE exit at one point this week. So we have seen some pressure on the U.S. dollar over the last couple weeks, which may help explain some of the strength we've seen in the corn and the beans here of late. Crude, energy market, highest level since early July. So we've seen kind of the rising tide scenario, at least with some of these commodities. Highest crude since early July, and obviously the equity market continues to climb slowly and grinding on low volume to new all-time highs. Livestock market, once again kind of a tough week, especially in the cattle, down approximately $3 on the week. Cattle on feed report came out this afternoon for August on feed in line at 101.6. Placements also came pretty close to what the trade was looking for at 101.6%, and marketing's pretty much in line with 2 less marketing days this past month at 99.3. So going forward, continued brisk, robust demand will be a talking point, and with that in mind, let's look at 3 C's going forward. Number 1, China is the driver typically of this brisk demand, as we've seen good export sales, especially in the soy complex over the last several weeks, going into new crop with a good book. Now keep in mind we've seen a lot of new crop sales here over the last several weeks, as I mentioned, but The amount of new crop beans on the books currently is pretty much in line or actually below several years over the last 5 years. So keep in mind. So the 3 C's to watch is capacity or space. Capacity on the farm, capacity in the local country elevator, capacity on the export side. And how fast harvest comes and the logistics to handle all that is going to be possibly a challenge this year with the size of the crop. But keep in mind, again, getting back to if you're a producer, you may want to look at some of those extra bushels with the current little pop in the market and with the potential of seasonals coming up here over the next several weeks, to look at this as a selling opportunity. So number 1 C is China, 2 is capacity, and 3 is the cash market or the carry. How much carry is there in the market? Right now there's no carry in soybeans. It's actually an inverted market where the market's actually telling us to sell today versus hold on. Look at some situations with that. Or in the corn, there's pretty good carry in the market. With deferred prices higher, in essence, the market is telling the producer to hold on to some of that corn inventory going forward. So all in all, we're approaching harvest. It's going to be interesting. And if you have any questions as a producer in regards to some ideas about protecting some of your price or pricing some of these extra bushels, please feel free to give us a call here at the office in Cedar Rapids. With that, wish everyone a great weekend, and this has been Clark Neighbors with BIS Commodities with your market review for the week of August 19th.